Hello, this is Will from JuniorWallStreet.blogspot.com. I'm here to do a little trade review of GameStop that I made this morning. So first, let's look at the bigger picture. As you can see here, GameStop has been super strong ever since it broke out in the end of March. I mean, look how cleanly it has traded. Look at the EMAs, how nicely they are apart, how it looks like it's a railroad track straight going up. Then all of a sudden, something changed. You have to know that the characteristics of the stock is no longer the same. Something, whatever that was driving this force up this way, may no longer be there. So at this point, you have to be a little more cautious. It's not saying get out of this position if you are long, but you just have to be aware that it's different now. And you fast forward a few days later, and they had earnings, which wasn't great, and it leads to today. So in the bigger picture, once it kind of did this move, then you could start looking short, but you just have to be prepared. So I wasn't prepared for this. GameStop was not on my radar at all. One of my trading buddies, Ed Weezy, he told me about it, and he was actually talking to me about the trade that he was in, and I was kind of in GameStop. Excuse me. And as we were talking about it, I was asking him when did he get in, when did he add things like that. Then I started to notice a pattern develop that I really liked, so I took the trade. But anyways, so here was the open, and the next candle, and the next candle. So as you can see, the EMA started to look like the beginning of a potential railroad track, and we could just wait to see what happens. And here was the first test of this moving average. So if you had a short bias already, then you could kind of do a feeler here just to see, and kind of below this candle would be your confirmation or your trigger entry. It just depends on how what you do to get into a short. And there's your feeler position. So had hit resistance here, came back, and now is retesting the low of the day. So if you had a short bias here, you had a feeler here, you could kind of use this information as, okay, maybe I can short on the break of this, on the break of the lows. Remember, we're also keeping this bigger picture in mind, where the characteristics of this uptrend is no longer there. So if you're thinking short, then you're thinking that it may have some follow through, or you would trade it as though it could. So there was another retest, and finally it broke through. So if you're in a feeler here, you're probably in a full position here. And when my buddy got in, he got in on this short here. So I was just talking him through it, asking him, okay, what's your idea, what's your plan? And he just said, okay, at some point the stock needs to pull back, so he's just waiting for a candle, a red can, excuse me, one of these 5 minute candles to make a higher high. So as you can see here, the 5 minute candles, none of these make a higher high. And here's the first green one. We can see if this makes a higher high. No, it doesn't. See? And he's just waiting, still waiting, and finally there it is. So at this point, he got out of partial of his position, and which I thought was a good decision, because he didn't get flat. That's a great point. He didn't get flat, and he's trying to manage his position. At this point, I'm talking to him, so asking him, okay, what would you like to see here in order to add? And he's like, he wants to see a test of the EMAs. I was like, okay, here's the first test. What are you gonna do? He said he's just gonna wait to see if a candle makes a new low. So he's just waiting. I'm just waiting, still waiting, still waiting, and then now I'm also thinking, I'm beginning to like this setup too. Let's just see what happens around the 21 EMA. And okay, here's the test, and here's a failure. And at this point, I got in somewhere around there. I think he got in somewhere. He got in more somewhere down there, and that was it. The risk reward was there because you're risking about, let's just say 30, let's just say 40 cents for potential uh one shoot you put me on a spot for 150 130. Either way, this is about three, almost 3 to 1, so risk reward was definitely there. And from then on, it tried to test the EMAs again and failed. So potentially, if you were mentally agile enough, which I wasn't, you could get in the short here and then perhaps add on this subsequent retest, because the whole basis of this setup is EMAs are resistance. I mean, that's the whole gist of it, right? EMAs are resistance. EMAs are resistance. EMAs are resistance. I didn't say specify which EMA, because there are times when the slower one comes into play. But you just have to wait and see how the stock reacts at the faster one and at the slower one. So if you had that mindset already embedded into your head, then this could be a potential add. Anyways, it goes, and you can see it started to use the 8 EMA as resistance again. And at this point, after this kind of sharp move below the lows, I covered a little here, but then I started to think, do I really want to cover that much in consolidation areas? Because essentially, this is, what is this? This is basically a bear flag, right? So where I am covering is where someone who wasn't in the position would be looking to add on a breakout. So I decided, okay, let me stop covering in the consolidation and wait to see if it breaks down below or breaks up. Because if it breaks up, then I probably want to get out of some, because remember, EMAs being a resistance is the whole basis of this trade. And finally, it breaks down below. And this is when I decided, okay, let me just cover some here just because it broke down so quickly, and just wait and see what happens next. And here is another little consolidation area, but again, same idea, right? I don't want to cover into consolidation. I want to see what happens above these levels, above these consolidation levels, or below it. And in this case, boom, it broke below it. So this is when I covered some more. Right? And at this point, I was thinking, okay, this might be a little capitulation setup here. How it's a long green tail, and if it trades above this green candle, I definitely want it to be out. So I moved my stop to above 3150, just because if you look, it's kind of extended from the EMAs. If you look the entire time, close to the EMA, close to the EMA, through it, resisted, close, hugging, and getting a little far off. So eventually it has to at least hug before it falls down even further. So here it started to consolidate and consolidate some more. Now it's giving the EMAs a chance to catch up. So remember, same principle. I don't want to cover within it. I want to wait until it kind of breaks above it or below it. And then here is when I saw it test this EMA again, and here is when it broke it. And this is when I covered some more. But I still wanted to see if the EMAs would have been acting as resistance. So this is kind of where I shorted some more. I think it was around here. But that quickly failed. So at this point, I'm completely out of the trade, and that was pretty much it. At that point, GameStop didn't really do anything of significance. So I mean, you just gotta kind of in the back of your mind see this type of pattern before and trade it accordingly. Because I mean, look at this, the EMA's holding very nicely, and if we go back to other trades like Cena the other day, see, same characteristics, right? I think Priceline one of these days. Well, I guess you could use this example. I didn't trade the stock, but see, EMAs are kind of always in control. Maybe not that day. Well, I mean, the point is these setups happen all the time. You just have to be have rules to trade them. Okay, thanks for watching. I'll talk to you guys soon. Have a great weekend.